All right, let's take a look at tech stocks. Joining us right now is Tony Wang, T. Rowe Price portfolio manager. Tony, thank you for being with us today. We've been talking a lot about how some of the other stocks have finally tried to start catching up with tech, but no doubt it's the tech that's been leading the way once again, and that has helped your portfolio pretty handsomely, I'd assume.
Yeah, I think, we are betting on the long term of technology companies that have really good sustainable advantage as well positioned for AI, I think. And so, part of it is like semis benefiting first in the AI infrastructure layer. And then I think what's next is actually agentic AI on the app layer, followed by physical AI eventually with robotics.
I was looking through your top 10 holdings, and both Broadcom and Oracle are in the mix in your top 10, and those are the stocks that have done so well recently in particular. Looking back at the latest filings for this from the end of August, Oracle was 2.5% of your portfolio. I would guess it's quite a bit bigger now?
Yeah, the position has done well. Oracle, I think that, the view there was that it was an emerging hyperscale player, and that they had an advantage in the networking piece in terms of faster, cheaper, more performant networking. And then combine that with I think, their long-term bet and conviction in where the AI market was going. I think that this market requires a lot of scale. And, to me, the way they're moving quickly and not just the chip side, but the data center capacity, the power side is very impressive. And I think, that the acceleration in the business into next year is I think what's driving the stock in a pretty positive way.
It's up at 87% year to date, up 22.5% just for this last month. I mean, obviously this was a stock you were invested in before, so it's gone up as a percentage of your portfolio. But do you continue to buy it at these higher levels?
I continue to like the company long term. I think that we could be still in the early mid innings of this build out. And I think that you kind of want to own the companies that are earlier on the S curve as a result of that. And the Oracle is kind of a newcomer to the cloud infrastructure business. And so in terms of their ability to be kind of clean sheet, less technical debt, ability to, architect these data centers probably in the most performant way, to me is pretty attractive. And so I continue to like, what they're doing over the long term.
Okay, some of the other stocks that you own, NVIDIA was 9.5%. Broadcom, like I mentioned, almost 5%. Palantir, Cisco, Salesforce, all up there. But Alphabet and Apple are your two largest holdings, or at least they were at the end of August.
Yeah, in terms of, I think that they are just, one of the companies that have a lot of distribution in AI, and they're very, pretty reasonably valued as well. I think about Google, their ability to improve their ad machine is really impressive with AI. I think you're seeing Meta do that as well. And so I think that the distribution of Google is probably underappreciated, and it's a little bit more of a contrarian bet, perhaps 6 months ago more than it is now. But to me, they can continue to compound, and they're in this investment cycle. And if they kind of come out on the other side of it with higher ROI, better free cash flow, leveraging their family of apps, I think that's really compelling. And then Apple's kind of, I think, they kind of own the ecosystem to where AI is consumed by the consumer. And so, to me, there's probably an upgrade cycle with iPhones that have been pretty aged since COVID, and you've got foldable perhaps in 12 to 24 months. And so I think there's multiple catalysts on top of them perhaps changing the narrative that AI is going to be a sustaining innovation that can stack on their existing revenue streams.